Hi there, good afternoon. You've tuned into ET Now and this is Market Fatafat with me, Cheryl D'Souza. Along with me, as always, I have Vinny Motiwala. Very good afternoon to you, Vinny. And taking a look at what the markets are doing at this point in time, yes, it's been a very flip-floppy sort of a day. We opened negative, then we recovered sharply, then a sharp knock, and now again, we're trying to stage a recovery, but looks like we're not able to sustain it as of now. So markets are trading absolutely flat in today's trading session. If you look at Nifty Bank, that one also was moving in tandem with the benchmark index. It was the PSU Bank index that's actually firing on all cylinders. If you look at PSU Bank index, it has hit a 12-year high in today's trading session. You also had Canara Bank that came up with their numbers a short while ago, and sharp spike in on that particular counter. It is the metal space that's under pressure, and a lot of other stocks to talk about. That we'll do in the next 1 hour.
Absolutely, but let's get started with all the stocks then that are buzzing in trade, either on the back of news flows or on the technical front. And on the technical today, we are joined by Sameet Chavan from Angel Broken, while from the research team we have Harsh as well as Ishesha joining in with us. A very good afternoon to all three of y'all, and a good afternoon to you as well, Cheryl. Let's get started with the first stock that is in focus, on Aarti Drugs. You know, what a move that we're seeing coming in the stock after the numbers, as well as there's an announcement that has come in as well. So let's take a look at the numbers first. Now, when you look at the numbers, we're seeing a 6% growth coming in for Aarti Drugs on a year-on-year basis at 661 crores in terms of the revenues of the company. While in terms of the profit of the company, we are seeing that the profits have seen a growth of 37% coming in at 48 crores. Operating performance also seems to be strong this time around as well, and look at it, 25% uptick in terms of the EBITDA, as well as the margins have seen an expansion of around 200 basis points approximately as well. EBITDA margins coming in at 12.9% versus 10.9%. Now the other news flow is about the buyback. We know they were going to be announcing the buyback, but there are more details that have come in where they said that they are going to buy back up to 6.65 lakh fully paid up equity shares of the company, which have a face value of 10 rupees, which represents around 0.72%, 0.7% of the total paid up equity share capital of the company, and that's going to be at a price of 900 rupees per share. The record date is proposed to be 4th of August 2023. So yes, that main buzz is also coming because of this buyback news, as well as the price that they've announced at which they're going to be looking to buy back as well. So keeping an eye out on that, today seeing an uptick of almost 16% in trade, and that's Aarti Drugs for you.
All right, let's move on and let's talk about the top loser on the Nifty today, and that definitely is Kotak Mahindra Bank. If you look at the stock price, last time I checked, the stock was actually trading lower by about 3.5% or so, and is holding on to those levels as well. Also, remember that they had come out with their numbers over the weekend, and what they are saying is that if you look at the numbers and the final details of the numbers, it showed a higher ratio of loans that actually ended up becoming stressed in the quarter gone by, and that kind of has not gone down well with the markets as of now. So if you look at what they've said for Q1, they said they reported slippages of around 1,205 crore rupees. That was about 0.4% of its net advances. When you compare that to what it was in the preceding quarter, it was around 820 crore rupees, which constituted about 0.3% of the net advances. If you look at the gross NPA also, it's seen a tad bit of actually decline coming in. When you see decline, as in it saw a spike, but it is decline coming in on when you look at the asset quality ratio. If you look at what the brokerages are saying, you have Motilal Oswal that is maintaining their neutral stance. They've raised the target price to around 2,170 rupees per share. You have Citi, which is also saying that they're maintaining a neutral stance on the company, and they've raised the target to 2,015 rupees per share. Also, you have Jefferies that's maintaining a buy stance with a target of around 2,400 rupees per share. So yeah, irrespective of what's happening in the quarter gone by, you still have brokerages reposing faith on this counter.
Okay, let's keep an eye out on Kotak Mahindra Bank then, and let's move on and talk about BEML, and that's the first stock you picked out for us on the charts, Sameet. How should one be actually looking at it now in terms of the run-up in the last 3 months specifically? When you look at it, that's the time when you've seen a sharp recovery coming in BEML since April. Now from here on, what is the expectation from BEML? Is it still a buy call for you?
This stock has been, consolidating of late, but it's a healthy sign whenever the stock is in a strong uptrend. So we can consider this as a good time-wise correction. On Friday, we saw the stock resuming its upward trajectory. A decisive breakout happened along with sizable volume. So we were, looking at this particular counter as a stock of the week, and the stock has already met our immediate target. But with the positional view, will not be surprised to see this stock even surpassing 1850 mark. So overall, 1850, 1900, these are the next levels to watch out for as far as BML is concerned. Any depth from current level would be a good buying opportunity. The previous resistances, 1650, 1620, should now act as a very strong support in case of BEML.
Alright, so that's the take coming in on BEML. But Shesha, coming to you, let's talk about Vedanta and why is this particular counter in focus?
Well, yes, Vedanta is in focus on the back of its results, which it reported on Friday post-market hours. The stock is declining 2.5% lower in trade as we speak. Numbers were on the weaker side, revenue slightly above what the street was working with, but margins were below street expectations. As far as management commentary is concerned, that has been muted. Remember, lower commodity prices and lower volumes during the quarter is what impacted numbers this quarter. Lead, zinc, aluminium prices declined anywhere between 5 to 20% on a sequential basis. Management commentary on capex was quite crucial. They said that they will announce capex requirements on their semiconductor foray in the due course after the feasibility study is completed, and they've also roped in consultants to divest their steel business as well as some other iron ore blocks. Investec meanwhile has maintained its sell stance on the stock with a target of 180. They say first quarter EBITDA was below estimates and debt continues to swell. Remember, debt at the end of last quarter stood at about 45,000 crores and it has risen to 59,000 crores at the end of the first quarter. They see risk of VRL cash flow mismatch forcing the company to divest its steel assets, and the company's foray into semiconductor is surprising considering its current cash profile. All in all, weak set of numbers, brokerages are not happy, and that is the reason the stock is declining in trade today.
Okay, that's the reason why we're keeping an eye out on Vedanta. But let's move on and talk about BIOCON. And BIOCON is in focus on the back of a news flow. We have the US FDA that has actually completed two of the good manufacturing practices inspection at BIOCON Biologics Insulin facility in Malaysia. Now, the US FDA has actually issued a Form 483 with around 8 observations that have come in, and these are mainly not data integrity kind of an observation that has come in. They are mainly to enhance the operational procedures, training and trainings as well. And what the management actually said, that they're confident of addressing these observations, and they will work on that with the US FDA as well. So that is the reason we're seeing, actually, because of these 8 observations, there is clearly some pressure that has come in on BIOCON today and trading almost at the day's lowest point as of now. So keep an eye out on BIOCON, down almost 5%.
Alright, that's BIOCON for you. The news flow surrounding which is seeing a knock of around 5%. But Sameet, BIOCON, if you look at this particular counter, it has actually staged a smart recovery that is post in the last 3 months or so. Where do you see BIOCON headed from here on? Do you see this particular news development as a dampener on the charts?
See, yes, as you rightly pointed out, toward the fag end of last month, we saw good recovery in this counter, and it suggested that the stock is likely to come out of its long slumber phase. Stock managed to surpass its 200-day average, but there was no follow-up seen after that. In fact, stock consolidated, and today we are seeing a big knock in the stock. So it is important to highlight, stock is now challenging an important cluster of support. So 250 to 242 should be seen as a key support. It would be a kind of make or break zone for this particular counter. So it is important to highlight that as long as it manages to hold this important support cluster, yes, there is no reason to worry for. But once this stock slides below 240, 242 and sustains below this, then probably we could see this stock against continuing its long underperformance, and then probably levels like 230, 220 can be retested in the near term.
Alright, so that's the take coming in on BIOCON. Let's just put the spotlight on the numbers flashing at the bottom of your screen, and that is for J&K Bank. If you look at the PAT, a spectacular rise on a year-on-year basis, 96% uptick. The PAT is coming at around 326 crore rupees. If you look at the operating profit, that's the PPOP, that also seen a growth of about 64%, coming in at around 628 crore rupees. If you look at the provisions, I believe that's the part that it's seen some sort of an uptick, I believe, but I need to just confirm that part. But the provisions have come in at around 77 crore rupees. Also, if you look at the gross NPA, substantial reduction in the gross NPA, 5.77% versus 6.04% on a quarter-on-quarter basis. But there is something that is spooking the stock. As you can see right now it has taken a nosedive. It's down about 1% or so.
Surely we'll keep an eye out on any of that update that comes in, furthermore finer details of that as well. As of now, first cut didn't seem like a bad set of numbers in terms of the profitability, at least on that front as well, or on NII growth. Keeping an eye out on J&K Bank. But let's move on and talk about SJVN and REC, Harsh. Why are these two stocks in focus?
Because firstly, SJVN has secured financial assistance of 50,000 crore from REC. On the back of that, you can see both stocks away and buzzing. The other piece also is that SJVN has received a letter of intent for 1200 megawatts of solar project setup, and that's again another plus coming through. Of course, REC itself, rough balance sheet size of around 4 lakh odd crore. So this is, substantial from REC's overall balance sheet perspective. It's roughly 12 to 13% of its current balance sheet, which is substantially large. So definitely a plus coming in for REC as well as SJVN. Secure some amount of financing as well as, of course, new order wins.
Okay, surely keeping an eye out on both these stocks. But Sameet, you have picked out SJVN as well first, and REC. So first, let's go to SJVN for you. What are the charts indicating for SJVN? How are you seeing it from your on? That was a news flow which Harsh highlighted. But look at the run-up that the stock has seen in the last 6 months. Almost 65% uptick, Sameet. Still more upside for this one.
Looks like, ever since the stock surpassed its multi-year highs of 40, there has been no stopping. If you look at the volume activity, it has been rising continuously, and if you see its month-on-month performance, stock has already surged more than 38% this month. So overall the bias remains positive, and since it has come out of its long multi-year in fact congestion zone, considering the overall buying participation, the volume participation, we expect this stock probably surpassing 60 in the near term itself, but 64 to 68, these are the next level to watch out for as far as SJVN is concerned. And any dip, any minor profit booking in this counter should be treated as a good buying opportunity.
Alright, but that's your view coming in on SJVN. What about REC, Sameet? Similar views coming in for REC as well?
In fact, all these, power financing companies have been doing well since last couple of months. As far as REC is concerned, we can see a series of higher highs, higher lows in all time frame charts. Stock has surpassed its short-term hurdle of 172 today itself. So from here on, next level to watch out for would be around 180, 182. And on the lower side, 160, 64 should act as a very strong support zone.
Alright, so that's the view coming in on REC. You also have Poonawalla FinCorp that's come out with its numbers. We will get some more details and let's talk about that particular stock then. But let's talk about Canara Bank then. A short while ago, you had Canara Bank also that reported its numbers, and if you look at the profit, it came in at around 3,534 crore rupees. Substantial uptick when you see it on a year-on-year basis. If you look at the NII, saw an uptick of about 27%, coming in at around 8,666 crore rupees. Talking about the gross NPA levels, a good improvement coming in the gross NPA is 5.15% versus 5.35% on a quarter-on-quarter basis. Net NPA also saw an improvement on a quarter-on-quarter basis. So net NPAs came in at around 1.57% versus 1.73% on a quarter-on-quarter basis. If you talk about what the provisions were like, the provisions, however, saw a slight uptick on a quarter-on-quarter basis. But if you look at the gross NPA front, as well as the NIMs that's coming at 3.05%, which is actually much better than what the street anticipated. And that's the reason why Canara Bank is actually seeing the jump of 3%.
Okay, so that was the numbers for Canara Bank. Doesn't seem like a bad set of numbers. We're seeing a sharp jump up coming in the stock as well. But on the charts, Sameet, you two have picked out Canara Bank for us. What is your view on Canara Bank? Is it still a buy for you?
Yeah, if you see, the overall banking space has been muted since morning, but the entire PSU banking space has been buzzing, clearly led by the Canara Bank. Stock has surged quite sharply post its numbers also. It is challenging its recent highs, and considering the overall price development, if the stock manages to stay close beyond 345, 346, then probably we would expect this stock continuing this upward trajectory, and then 360, 362 levels can be tested in the near term. So overall bias remains positive. Since the move has come after its quarterly numbers, we would rather wait for its daily close beyond 345, 346, and then 360, 362 cannot be ruled out in the near term.
All right, let's talk about Poonawalla Fincorp then. The numbers are flashing on the bottom of your screen. If you look at the PAT, it's coming higher by about 62% on a year-on-year basis, coming in at around 200 crore rupees. If you look at the standalone NII, that's seen an uptick of about 57.8%, coming in at around 421 crore rupees. So that is the numbers, initial numbers coming in for Poonawalla Fincorp. If you look at the stock, it has actually come off the day's highest point, but still holding on to positive territory. 0.7% uptick coming in for Poonawalla Fincorp.
Absolutely, and there's some news flow announcement also, I believe, that is coming in terms of buyback, but we'll keep an eye out on that one as well. As of now, let's keep an eye out on the numbers for this one. But let's move on and talk about Credit Access Grameen as well. This stock is also in focus, Ashesha, today, and I believe this is also on the back of its numbers.
Yes, very strong set of numbers. The stock, in fact, is perched up nearly 6% as we speak. Profit is nearly doubled on a year-on-year basis, well above what the street was working with. Loan book has shown significant growth on a year-on-year basis. Net interest margins, meanwhile, have improved both on a year-on-year basis as well as on a sequential basis. As far as FY24 guidance is concerned, it has exceeded FY24 guidance on all parameters. Management outlook is quite confident. They say they are confident of achieving FY24 guidance. They aim to soon surpass 25,000 crore mark for the loan portfolio during the 25th year of their operations. Very strong set of numbers. We also have brokerage notes that have come in. CLSA, for instance, has maintained its buy stance, but it has hiked its target price from 1350 to 1600. They say company reported healthy growth and asset quality, and hence they have upgraded their estimates anywhere between 4 to 15%. Loan growth was in line, sharp jump in spreads and declining GLPA ratio trajectory continues for the company. All in all, strong set of numbers. Brokerages have given a thumbs up, and that is the reason the stock is gaining over 6% as we speak.
All right, so that is Credit Access Grameen. But Sameet, let's talk about PVR Inox. I think one of the stock that was also buzzing on the weekend, you could say, was PVR Inox, given the fact that you had those two big releases, blockbuster movies. But apart from that, PVR, the stock has not done that great over the last 6 months. Do you see some sort of a scope of revival for this one?
Yes, at least on Friday, the stock managed to show some promise. It confirmed its breakout from its short-term resistance of 1450. If you look at the volume activity, it has risen substantially on Friday. Unfortunately, since lack of follow-up buying, stock corrected a bit. But overall, it has retested its previous breakout points. As of now, at least chart structure looks promising till the time it does not violate its importance about of 1450. So probably in a day or two, again, if the buying momentum starts, then this stock can head towards 1550, 1580. At least there's some promise this stock has shown on Friday. So let's see in probably next couple of days if the move starts, then yes, we can see the stock performing well in the near term.
Okay, some promise that PVR Inox has shown. Let's keep an eye out on that, and exciting lineup of movies also coming in for in the next couple of weeks as well. So that is something that will keep the stock in focus as well. Let's move on and talk about PFC then, Harsh. And why have you picked out this one for us today? What is the news flow that we are seeing? A sharp uptick already seen in the stock.
Well, yeah, 6.5% higher on the back of new MOUs signed, Vinny, and the MOU quantum is really what is quite surprising. 2.4 lakh crore is the size of these MOUs that PFC has signed up. 20 companies, largely in the clean energy space. Now, PFC's balance sheet is roughly 4.5 lakh odd crore. So this is definitely quite large, quite substantial. Now, in terms of what the MOUs are for, they're for solar, wind, green hydrogen, battery storage, EV, green energy equipment. So across the board, it's all about energy. And what you're also seeing is companies like Adani Green Co, Renew, Continuum, Avada, JBM Auto, Mega Engineering, as well as Rajasthan Renewables, all of which are part of this 20 company MOU, or rather MOU with 20 companies that PFC has signed. So essentially, that's what's keeping the stock in focus. Of course, stock up and away, 6.5% higher.
All right, that's PFC for you. But Dr. Reddy, Sameet, how is this one looking on the charts to you? We've seen some sort of a comeback in some of these pharma names. And look at the comeback in Dr. Reddy's, 28% in the last 6 months. Do you think it's sustainable?
Yes, certainly looks like. In fact, the entire pharma space has managed to find its mojo back. As far as Dr. Reddy is concerned, after cementing its position around 4,400, since last couple of months we have seen a great vertical rally in this counter, and there has been no stopping. If you see, since morning the stock has been buzzing. Slowly and gradually we would expect this stock heading towards its multi-year highs of 5,600, and once it surpasses 5,600, then probably it is likely to enter an uncharted territory. So as of now, the bias remains positive. As far as supports are concerned, 5,200, 5,250 should act as a very strong support.
Okay, keep an eye out on those levels for Dr. Reddy's. Let's move on and talk about another earnings candidate and the newly listed company that signed DLM. They too reported their numbers. When you look at it, revenues, that's seen a decline of around 21% on a quarter-on-quarter basis, coming in at 217 crores versus 277 crores. Now, when you look at the operating performance, the EBIT, that has also seen a decline coming in of 44% on a quarter-on-quarter basis, while the EBIT margins are at 6.9% versus 9.7%, down more than 250 basis points as well. So clear pressure that is coming in on the operating performance as well. Profits also have seen a decline coming in, and that is why we saw a sharp downtick coming in the stock in the morning trade, but slight bit of a recovery still. Trading with a decline of almost 1% as of now as well. Also in terms of updates coming in on the appointment of a non-executive independent director as well. But keeping an eye out on signed DLM, a slight bit of a weakness seen in terms of the numbers.
All right, that's signed DLM. Remember, this one just recently listed on the bourses. But Sameet, coming to you, Glenmark Pharma, looks like you are definitely liking the pharma space, and you think Glenmark will also stand out?
In fact, it has been standing out since last couple of months. Within the pharma space, this has been one of the rank outperformance in the recent past. Stock has rallied quite sharply from the levels of 400, and as we speak, the stock is trading around its multi-month highs. So overall, the bias certainly remains positive. Yes, the low-hanging fruit is already gone now, so fresh buying is certainly not advisable. Those who have been holding, those who have been riding this move, they should now start trailing their stop losses higher. So 750 is the immediate support to watch out for. One can keep a trailing stop loss around 750 and then continue to ride onto this particular move.
All right, that is Glenmark for you. But let's talk about ICICI Bank, because on Saturday you also had ICICI Bank that came out with this number, not just Kotak. And if you look at ICICI Bank in today's trading session, it did hit a record high level. But from there on, it's actually given up some of those gains. Remember, you also have brokerages that have come out with their optimistic view on ICICI Bank, and that also could have led that up move coming in on the stock in earlier in the trading session. But if you look at what the numbers were, also what the numbers are saying, is if you look at the bottom line of the company, that's on an uptick of about 39% on year-on-year basis. This was aided by strong growth in the advances as well as the fee income. If you look at the NII, that one also saw a good growth of about 38% on a year-on-year basis. The management also said that the right path to tap into synergies between the bank and ICICI Securities was to make the latter its wholly owned subsidiary again. And remember that they had decided to go ahead and do that, to make ICICI Securities a wholly owned subsidiary by delisting the latter share. Also, the management clarified that the decision was driven by the pursuit of synergies between the two entities. Also, following the numbers, a lot of brokerages, like I said, have come out with their notes. So you have Jefferies, Motilal, as well as Prabhudas Leeladhar, also Nuvama, all of them actually maintaining a buy stance on the company, while Jefferies has gone ahead and raised the target price to about 1,240 rupees per share. So yes, you have brokerages giving a thumbs up to ICICI Bank post its numbers. No doubt it's off the day's highest point. Nevertheless, not to forget, it hit a fresh record high level in today's trading session.
Okay, that is ICICI Bank for y'all. But let's move on and talk about Titagarh Rail then, and Ashesha. This one is in focus in the back of its numbers as well.
Well, yes, very strong set of numbers that have come in from Titagarh Rail Systems. The stock, in fact, is up nearly 6% as we speak. It is a beat across parameters. Revenues, in fact, have seen an uptick of nearly 110% on a year-on-year basis. This is on account of strong execution in both freight and passenger rail systems. EBITDA has come in at about 110 crores, an uptick of a whopping 160% on a year-on-year basis. As far as margins are concerned, they too have seen an uptick on a year-on-year basis. They've come in at 11.7%. As far as segment-wise performance is concerned, Freight Rail System division stood out in the quarter gone by, and that is because revenues are up 112%. Margins have come in at 13% on a year-on-year basis. It has seen an uptick of nearly 220 basis points. But if you look at the stock, it has already moved up quite a bit. In fact, year to date, the stock is up nearly 180%, and despite that, the stock is moving higher in trade today. Strong set of results. As we can see, the stock is up 6% in trade.
All right, on that note, actually we slip into a break on this edition of Market Fatafat. A lot of stocks to discuss post the break, so don't go anywhere.